welcome into Heads or Tails. Bill Priestley here along with Michael Rudolph. It's been a while since we've done one of these. So now let's take a look at where we're at now and how are we in headwinds or tailwinds, sir? Take us through this.
We are going to be looking at manufacturing conditions from the three major Federal Reserve surveys. So that's New York, Philadelphia, and Dallas. And this is for the month of June, right? So New York is first up. They're very heavy players in chemical manufacturing. We need a little bit of context for this because it looks good on paper. These manufacturing firms are asked about how conditions are going to shake out over the next 6 months. Will they improve or will they decline? And so in May, we saw 9.8 was the index, slight improvement over the next 6 months, and then that jumped up to 18.9 in June. Now, that said, the current business conditions index, right? Where are things now in May and June? It was very sharply negative in May. It was like record almost for one of the worst readings of all time. It did improve to June, but only slightly. So May was disastrous. June was only slightly better than May. So as we're looking for these slight improvements over the next 6 months, it looks like they're going to linger in contraction for a much, not contraction per se, but negative business conditions for a while. Now, as I said, New York is primarily driven by chemicals manufacturing. That has been one of the strongest sectors, over the past year, let's say. Unlike, textile manufacturing or, electronics manufacturing, the U.S. chemicals industry has had a pretty, stable base, domestically. They haven't had a wandering eye to other countries. And that is kind of paying off. But if we could go to the next chart, we look at Philadelphia. And yeah, that is, steel, all kinds of metal, fabricated metal products, negative. So the mood is not sunny in Philadelphia, let's say, over the next 6 months. We just came off a minus 17.9 reading in May, up to a minus 5.3 reading in June. A lot of the difficulties that they're having in Philadelphia are labor supply issues. I think everybody manufacturing is having difficulty finding the right person for the right job. That said, there's also a lack of capital investment. People want to kind of hold on to their money in short-term supply. They don't want to risk it by putting it into something that may fail to pan out or may cause the business to be in an unstable condition. It also brings us to, given that Philadelphia is so intensely caught up with metal, brings us to China, right? And, China is in an interesting position because, for lack of a better word, or to put it lightly, geopolitical tensions with China are tense between the U.S. and China right now. And China understands this, and they have a very hawkish stance on the U.S., all things considered. However, their economy is in trouble, and they also understand this. And it turns out that, China might need the West more than the West needs China, at least in terms of manufacturing and their economy. So as Philadelphia contracts, right, this is bad news for China because they see not only is, supply contracting, but also demand is contracting because if domestic producers are not seeing demand, why would Chinese producers see that demand, from the US? So we can go to our final chart here in Dallas. And this is at -9 for June, right? Heavy exposure to the energy sector, which has, suffered a lot of instability, let's say, with oil prices being what they have been over the past few months. And, you get a lot of complaints out of Dallas. Everything's bigger in Dallas, including the pessimism. And that would be, just not enough labor, not enough qualified labor, weak appetites from their customers. Especially in chemicals manufacturing in Texas, they say that their customers are still undergoing their destocking, and so they're not very, anxious to kind of resupply and get an inventory glut that they just are finished getting rid of. So that is, weighing heavily on demand in Texas.
One of the things that I've noticed is in the three charts that you've shown, especially, is not so much in this one, but certainly in the first two, is the fact that there's been some unpredictability in the last couple of months. We've seen up and down and up and down and up and down. Is that something that you see continuing, or is that something that is just the unpredictability of the market right now?
So as I said, the chemicals and manufacturing sector, which has been one of the strongest sectors of the past 12 months, let's say, they admitted in the most recent Purchasing Managers Index report for June that they initially saw that the back half of 2023 would be stronger than the first half. they don't necessarily see that demand forecast panning out. They're kind of lowering their expectations. So in terms of the volatility from month to month, I don't think that you're going to see that necessarily. I think people are starting to get a grasp of what the back half of 2023 is going to look like. I think many sectors, many firms initially thought it was going to be the next great white hope. Not so much as we're seeing now.
So with these, obviously, you've got two indices here in the negative, one index in the positive. That brings us to the question of heads or tails. Are we seeing headwinds or are we seeing tailwinds as we move forward here?
This is unfortunately is a major headwind to future demand growth.
Can you elaborate on that at all?
Sure. I mean, the modes that are most exposed to this manufacturing sector are, of course, flatbeds and LTL, right? LTL has been having their own problems with, UPS and Yellow. And then flatbeds, they're not seeing a lot of demand growth from other sectors such as construction, and then oil and gas, just domestic production of oil and gas. So that they would lose manufacturing in such a crucial way when they need it most is disheartening. Yeah.
Real quick, how unpredictable is this right now?
I think it will be consistently pessimistic over the next 6 months. We won't see a lot of demand growth, but we won't see it fall any further than it already has.
Okay, so it's going to be an interesting certainly an interesting back half here of 2023. Any ideas as to how that may play out at all?
I'm rooting for the peak season to kind of take us by storm. I don't see it happening, unfortunately, but I'd like to see it happening. Oil and gas may tighten, and that may be a boost for flatbed demand, but that would be kind of entirely separate from this. However, it might juice prices higher as shipping is in demand. Capacity is limited, rates go higher, and then product prices go higher as well.
Certainly numbers to watch, definitely so. Michael Rudolph, thanks for joining us here on our latest edition of Heads or Tails. He'll be back next Monday to recap and see where things are headed at that particular point. We'll take a short break, be back right after this.